Good afternoon, class.
Good afternoon, sir.
Yes, this is Victorian Girls on Elimu TV. We are doing a revision of Chapter 7, Form 3 Business Studies. That is determining the net worth of a business. Determining what?
The net worth of a business.
Determining the net worth of a business. Determining the net worth of a business. Now, I believe last year in Form 3, we must have tackled this area. And for the same reason, I'm not going to introduce you to this chapter. We're just going straight away to tackle the questions that have been set in the past exams, in the past KCSE from this chapter. To start with, just as a way of review before we look at the questions that have been said before. Now, this chapter, it basically deals with accounting. In Form 1, when you are introduced to business studies, we say business studies has how many components? 5. 1, economics. 2, commerce. 3, accounting. Office practice. And entrepreneurship. Now, this area, we are dealing with accounting. This is where accounting starts. In Form 1, Form 2, you've not done any accounting. So accounting starts from Form 3. Now, when we talk about determining the net worth of a business, what do we mean? In a business, we have capital, we have assets, and what? Liabilities. We have capital, we have assets, and what? Liabilities. These are what is entailed, or what is what is in a business. Now, what is capital? Capital is referred to as the owner's claim from the business. What the owner of the business brought into the business. What the owner of the business invested in the business. It's called capital. It's also referred to as owner's claim or equity. From where? The business. What are assets? Assets are all the resources that are owned by the business. All the resources that are owned by the business are referred to as assets. And assets are in 2 categories. We have 1, fixed assets. 2, current assets. What are fixed assets? Fixed assets are those resources which are expected, they are expected to last for long in a business. Usually for more than a year. They are called fixed assets. The key one is intended, expected. Are you together? Yes. Current assets. Current assets are those resources which are not expected to last for long in a business. Their lifespan is usually less than a year. That is why they are called current liabilities. What are liabilities? This is outsiders' claim from the business. What the outsiders are claiming to be theirs from the business. They are called liabilities. They are called liabilities. Example of liabilities: loans, creditors, bank overdraft, and any outstanding expense, any accrual, any expense which has been incurred but have not been paid for is what? A liability. Similarly, liabilities are put into 2 categories. We've what we call permanent long-term liabilities and what? Short-term liabilities. What are long-term liabilities? These are liabilities that are paid for. They are paid for. They are paid for in more than a year. Examples: 2-year bank loan, 3-year bank loan, etc., etc., etc. Current or short-term liabilities. These are liabilities which are supposed to be paid for within a year. They are called what? Current or short-term liabilities. Examples: bank overdraft, or what? Creditors. Are you together?
Yes.
Now, let's look at this question that was said last year. This was the year 2014. Question 12. This is how it goes. You've been told, fill in the missing figures in the table below. Fill in the missing what? Missing what, students? In the what? Four marks. Number one, the table below. Below. Now, this table, we have FA meaning what? Yes. We have FA, that's fixed assets. Then here we have A. Here we have CA, meaning what? We have C, meaning what? Capital, and L, meaning what? Liability. So A, we've been given 275,000. Are you together? Then dash 315,000. We have 115,500. B, we have fixed assets 102,000. Current assets 108,700. And then capital dash, then liabilities 270,100. C, we've not been given fixed assets, so it's a dash. Current assets 76,400. Then capital 103,100. Then liabilities is 91,900. D is this question, but D of the question 13,450 for fixed assets. Then 211, 340,000, then 189, 170,000, then a dash. So that was question number 12 of the year 2014 KCSE paper 1. So it's an example of a question from which a chapter determining the net worth of a business. Now, let's answer question A. Question A. We understand that the accounting equation or the balance sheet equation is A equals what? C plus A plus N. Where A stands for what? Assets. C, capital, and L what? Liabilities. Are you together? Now for this question, we've been given what? Fixed assets. As you can see, we have fixed assets. We are missing current assets, isn't it?
Yes.
We have capital and liabilities. Are you together? Of how much? How much do you get?
132,400.
With what? Assets, because previously we've seen assets, we have two categories of assets. We have fixed assets and what? Current assets. Collectively, around what? Assets. Are you together? Now from here, you will say FA is what? Fixed assets plus current assets is equal to what? Capital plus liability. Are you together? Yes. Now, there are two ways of doing this. You can make current assets the subject of the equation, isn't it? Now, what hold it up here? You'll say current assets is equal to what? It's equal to capital plus liabilities minus what? Fixed asset. From your knowledge in mathematics, when this crosses the equal signs, it becomes what? A negative. So in this case, what is our C here? You don't have to it.
Yes.
What is our C? 350,000.
Yes.
Yes, of course, shillings. Are you better? Plus what? Liabilities? 100 what? 15,000, isn't it? 500. Yes, you must be very keen. Such things can make you miss a mark. It is 115,000. 5 minus what? 275,000. So in that case, you add this. How much you get? Those who have calculators? 350,000 plus 150,500. How much you get? Yes. 400,000. 500. 400,000. What? 500? Isn't it? Yes. Minus what? 225,000. How much you get?
155,500.
155,500. What is this? What? And you score what? 1 mark. That is part A. Any question here? This is where you need to understand. You break this. Without knowledge, you won't score any mark from this question. So you must be having these things at your fingertips. Let's look at part B. This was A. Part B. What do you want? Yes. From this equation still, we will say A is equals what? C plus A. This is the best. This is the mark of all the other equations. When you have this, you can play with anything. In this case, they want C. C. You will say capital equals what? It's equals to A minus A. Now this one comes what? Is that a sign? Because it's a positive, it comes a negative. Now, do you have assets here? Yes. And our assets equals what? It is FA plus what? CA, isn't it?
Yes.
Minus what? Minus L, isn't it? Yes. That's liability. In this case, liabilities is wholesome. It doesn't mean what? Have you got that? Now, how much is our FA? 100 plus what? Isn't it?
Yes.
Minus what? 200 100. Isn't it? Yes. You add this. How much you get? 200.
90,700.
Correct. Minus what?
117,000.
What do you get? Of course, shillings.
76,600.
76,000.
73.
Correct. 70,000.
600.
600. You get your mark. Very simple. These are 3 marks that you should always go for. Are you better?
Yes.
Now, part C. Who can do for us part C? Not that I have. Part A, B, C. As we said one time, they don't want fixed assets. We have current assets, we've got capital, we've got liabilities. Class, who can do us? Maria? To the end.
In part C, we are finding fixed assets.
Yes.
We say when we are finding assets is equal to so fixed asset is in assets. So you say FA is equals to C plus L minus CS.
Yes.
And FA is equals to C capital name
76,400.
What is it? L is 91,900. CA is 6,100. Very fast class. Clever. Very rare. But D. Very fast. Second time. Relax. So you can wrap very end.
Real assets and capital, non-real funding and liability. We're going to add both assets, fixed assets and current assets.
450. 450,000. That was 21. That was 211, 340. 211,000. 5.
524,790.
We're going to subtract capital.
Is 189, 170. Shillings. Master speed. Shillings. Yes. Clever. So class is as simple as that. Here you must have this formula always at your fingertips. Because with this one you can find any missing item, be it asset, be it capital, be it liabilities, you'll always maneuver with this one. This formula and calculate it as you have done, as you have done. So these are free marks. These are the questions that you must rush for. Free marks. Are you together?
Yes.
Yes. Now on the same line, let's look at something different, but still within the same chapter. Now, this one is on page 101 of Form 3, exercise 7B. We've been given some information. We are told the financial period of Kanuka Traders House ends on 30th December every year. On the 1st December 2001, that is 2001, the business had the following assets and capital. And what? The following what? Assets and capital. Now on this one, the business is called Kanunga Trace House. Kanunga what? Kanunga Trace House. This is the information we are giving pertaining on this business. We have capital. Capital is shillings what? 200 and what? 24,000. We have stock of goods. Stock of goods was what? Shillings 1,500. We have debtors. Debtors was amounted to shillings 2,000. Machinery. machinery, valued at shillings 20,000. And of course, we for cash, the last item, valued at shillings 4,000. Shillings 4,000. Now, here the question comes. Calculate, that is Roman 1. Calculate total liabilities of the business. Calculate what? Total liabilities of the business. Total what? Liability of the business. That is part Roman 1. Roman 2 is prepare a balance sheet as at the 1st December 2001. So let's start with the liabilities of the business. Now, here they are testing your knowledge. Do you know liabilities? Can you single out liabilities from other items? Are you together?
Yes.
So here, the balance sheet equation applies. That's what applies. Are you together? Yes. Now, as always, A is equals to C plus F, isn't it? Where A is assets, C is capital, and L is liability. What have we been asked? Total liability. So what do? You make what? L, the subject of the equation. You will say L is equals what? A minus C. Are you together? Where A is capital, R is assets, and C is capital. Do we have capital there?
Yes.
So what do we look for? We can get what? Total assets. So how much is total asset there? We start from what? We start from, let's identify from here. This one is an asset, isn't it?
Yes.
This one?
Assets.
This one?
Assets.
This one?
Assets.
Asset. So we get our data. Are you better? Then we subtract from what? Then I will subtract capital from what? From this amount. So in that case we have what? 1,500 plus what? 2,000? How much do you get? 1,500 plus 2,000 plus. You get what? 3,500? 3,500 plus 20,000. How much do you get? 23,500? 23,500 plus 4,000? 27,500? That's what? Total asset. You have 27,000? Minus what? 24,000? Are you ready? Of course, shillings, right? How much you get? It is 17,000? It is 2,000?
3,500.
Correct, 3,000? What is this? Our liability?
Liabilities.
Are you ready?
Yes.
If you have to prove it, you can do it, isn't it? You can say S equals what? C plus F. So our asset is what? 27,000 is equals to C is what now? Just the way to prove, isn't it? How much is C? 24,000 plus what? 3,000. How much you get? 27,500 is equals what? 7,000 what? When you want to prove, isn't it?
Yes.
That's how it is. Let's look at part 2 of the same question. What do you want? Now, the balance sheet is a representation of this. Are you ready? The first thing is the title. And the title has how many items? 3? 1, the name of the business. 2, the type of the financial statement. And 3, the debt. Are you together?
Yes.
So in this case, we have what? We say Kanunga, debtors, what? Balance sheet. Yes? As at. When? You put the question, if you told as at 31st December 2001. 31st December 2001. Are you together?
Yes.
This one is called the T format. The T what? T format. So to not confuse it with the other account. This one is not a financial account. That's how. So it doesn't have what? DR and C?
Yeah.
Are you together?
Yes.
So what do we have here? Fixed
Assets.
Fixed assets. Of course we have shillings, yes, isn't it? Yes. So how much fixed assets we have? How many assets we have there? Yes, of course we have 4 items, but out of 4, we only have 1 fixed asset. That is what? Very good. So machinery. How much? 20,000. What else? We come to what? Current assets. This one is called in order of what? Liquidity. Are you get that?
Yes.
No. Order of what? Permanency. See, is in the order of permanency. Which one is more permanent? So this one is what? Is more permanent than what? Current assets. Are you get that? Yes. Always read the question and understand. Because you can be given such information and then you're told, prepare Kanunga balance sheet in this order. They can say the order of liquidity. And since you're used to order of permanency, you start with what? Permanency. You'll fail. So read the question to the end. Because if they say in order of liquidity, what do? You start with what? Current assets. This side, you start with what? Short-term liability. But for our case, we just stick to our traditional standard. Is that what? Fixed assets. So current assets, what do you start with? Very good. Stock of what? Of goods. How much? It is 1,500. Then you come to the debtors. How much? 2,000. Then you come to cash. How much? 1,000. 4,000. And for your information, this side must be equal. This side. A is equals to C plus L. It must be balance. So we have our capital here. Plus liabilities. Are you better? So how much of capital here? 24,000. Are you better? 24,000. Do we have any current short-term liability or long term? No, is it? We just leave what? Liabilities. So how much are liabilities here? It is 3,000? Isn't it?
Yes.
3,500. Then you do what you call double underscoring. Double what? In accounting, this one is a must. You double underscore. Double underscore. On the same line, what? Using a rule. So you have. Then you add 20 plus 1,500. It is 1,000 plus 2,000, 23,500 plus 4,000, 7,500. 7,500. 24,000 plus 3,500. 7,500. And you get your free marks. You get your free marks. That is how you should always handle such a question. Any question, class? Any question? Any question on that? You okay? Yes. If you're okay, we can look at the last question. Look at the last question on the same area. The following balances were extracted from the books of Lumire. From the books of Lumire Mitumba Business on 30th April. The following balances were extracted from the books of Lumire Mitumba Business on 30th April 2011. So this is the information I hope you have this. So you should always extract the name of the business. So it's called what? Lumire what? Lumire Mitumba. Lumire Mitumba what? Business. Lumire Mitumba Business. Right here? Lumire Mitumba Business. This is the name we given. Creditors, of shillings, it is 38,000. Then we have cash at bank. Cash at bank. Cash at bank, 12,400. Then we have equipment. Equipment amounted to shillings 63,400. 63,400. Then we have stock. Stock amounted to shillings 18,500. Then we have debtors. Debtors shillings 11,600. 11,600. Then we have what? Motor vehicle. How much? 64,500. Of course, they are asking what? The balance sheet. As at 30th April 2011. These are 3 months. These are 3 months. Once you can single out these items from here: capital, assets, and liabilities. You always get got that. Are you getting it? Now, students, for us to prepare a balance sheet, what three items are key? What 3 items do we require? One, for us to prepare a balance sheet, what 3 items do we require? One, assets, isn't it?
Yes.
2, liabilities. 3, are you getting it? If you check from creditors up to motor vehicle, what is missing? What is missing here? What are you missing? Capital. Because in here, we've got how many items? 1, 2, 3, 4, 5, 6, 7. All this is a mix of what? Of asset and liability. So what we are missing what? Is capital. So you see, with this equation, S equals C plus F, M, you can always identify the items we missing. That is what you should be doing. So in this case, we will say, of course we know, S equals to C plus F, and C equals what? M minus F, and I together. From here, can we have our assets? So we are taking our assets, isn't it? We are putting our what? A cross what? Liability. So let's first of all identify creditors and asset or liability. So cross, isn't it? Yes, this is just for identify. Cash at bank, asset. Equipment, asset. Stock, debtors, motor vehicle, isn't it? So we combine, we'll add this, all this, isn't it? All this minus this is what do you get? We get what? Our. So let's start. We add 12,400 plus what? 63,000 what? 400, isn't it? That is how much we get? 0 plus 4, let's put together. 5, 7, isn't it? Yes. So we have the first and second one plus what? 18,500. Very fast. 0, 9, 13, isn't it? What do you get here? 9. So you still have 11,600. How much do you have here? 0. That's 15, isn't it? That is 5 together. Then what? 10, isn't it? Yes. And then we have what? Yes, 64,500. We have, isn't it? All this is addition. So how much do you have here? 0, 0, isn't it? That is 10, isn't it? Then that is 7, isn't it? What is this? Our what? Our assets, isn't it? Look at that. Asset. Yes. Minus what? Shillings what?
132,400.
102,004. What is this order? Isn't it? From here, let me just want to take free marks, isn't it? Yes. Very fast. I say, Lumina what? Lumina, Mitumba, isn't it? Business, isn't it? Yes, business. Or that's business. Business. As a balance sheet, say what? Balance what? Balance sheet. Yes. It is 400, isn't it? Go. It is 124. It is 12,400, isn't it? Plus 8,400. Correct. Correct. Isn't it? So you have 8, isn't it? 0. You have 8, and then here we have 5. This will be up to how? 3, isn't it? Huh? This is fresh. Yeah, this is good. This is simple mistake. A small error can cause, isn't it? Let's start afresh. It was 12,004. Very good. We add what? 63,004. How much you get? 0, 0, 8, 5. Right together? Very good. Then we add 18,500. Yes, 18,500. How much you get? 0, 0, 3, 4, 9. Correct. You go to how much you get? 0, 0, 9, 5, 10. Right. That is 105,900. 105,900. Then we have how much do you have here? 0, 0, 4. That is 0, isn't it? 7. Very good. Yes. You must break it. So balance sheet is at that year what? April 11. What do you have here? What is that with? Equipment, isn't it? Yes, equipment. It is 60? Anything else? Motor vehicle, isn't it? But in order of permanence, motor vehicle is more permanent than equipment. Yes. So it's a motor vehicle. So motor vehicle. How much is a motor vehicle? They don't equip. How much? Isn't it? Anything else? Count what? Isn't it? What do you have? Stock, right? How much? 18,000 what? What else do you have? Your debtors, correct? How much? It is debtors is how much? Correct, 11,600. Then we have cash. Add what? Bank. This is the money what? The bank. How much? Isn't it? Now, there are two ways of doing this. You can what call subtotal. Sub what? Yes. You can say total. Fixed assets. Right together. How much do you have? 0, 0, 9, 7, 12. These are all fixed assets. Right together. Then you can have total what? Current called subtotals, current assets. So when you add this very fast, maintain accuracy, must be very accurate. Must be very, very accurate. It is 40 for 2,500. Then now we sum up, isn't it? In this case, it is 1.900 plus what? 2 at 5. Yes, we double the score, same line. So how much? 174.
400.
What do you can know is that you have an answer. This side what? Capital plus of plus liability. It's a simple thing. Capital is how much? 100? Where is it? Yes, we still we have how much? 100 what? 2004? Isn't it? Yes. Yeah, we need some example. Now, then we have current assets, now current liabilities and total liabilities. No, isn't it? You only have what? Yes. When you have only one item under one category, there is only what? Category. I get that. Because you only have one. Correct? And we need what? Second liability. So what are we lacking? Don't have liability. So no need of what? Category. That's what, correct? How much? 8. What's here? What's here? Then you come, same line, double underscore. So how much is this? When you add this plus this, how much you get? It is 107,000?
400.
You score your free marks. Free mark? Any question? Any question on this? So you see how to go about it, isn't it? Make sure you have this one. This equation. Asset is supposed to capital plus liability. Number 2, be able to identify when we're given a number of items like 10, 15. Be able to single out 1. Which one is allowed? An asset. 2. Which one is what? A liability. And still, within that category of assets, be able to tell which one is fixed and which one is current. On the other hand, even within that category of liabilities, be able to what? Single out permanent, not permanent, long-term liabilities and what? Short-term liability. When you're able to do that, you always have a free mark. So if there's no question, we can say our lesson for today has come to an end. Yes, it has been the revision, Business Studies, Chapter 7, Form 3, the network of the business, determining the network of the business. Yes, until we meet next time, my name is Richard Mayo from Victorian Girls High School.